Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today I think that we could take a look at the Great British Pound, because here we also have very good stuff for trading, but it's a bit longer term than in euro currency. In general, patterns that we see on the Great British Pound are much better than on the euro because they are clear. They definitely point on the direction, and it makes it a bit more easy to follow it. The only difference is that it stands on high time frames, and it needs more time to be realized. That's why we're recent time relatively rare. Take a look at the Great British Pound. The situation here is developing slowly, and only when something has changed, we're, as usual, making an update on our overall situation. Besides, currently, as you can see, euro currency mostly stands in a tight range. So nothing is going on there. So by this reason as well, we could take a look at the cable. That is the weekly chart of the cable, if you remember, but probably you are not. In the last update that we have made in the weekly report on the cable, we talked about the possible upward action. So it could be a significant action. What the reason will be with that, it's difficult to say. Maybe Great Britain will show the better statistics, better resurrection after the virus. Maybe some other reasons will be, but here we have the clear patterns. So this downward action on the monthly chart, if you'll take a look at it, you will get huge bullish grabber. That's just the upward reversal and upward action. So all the stuff that is going on here, the recent month, stands inside of the range of this grabber. On the weekly chart, the lower part of the grabber takes the shape of the perfect and huge bullish engulfing pattern. So that is the pattern of our particular interest, because this pattern itself, even with no relation to the grabber, suggests a kind of the A, B, C bottom, D action, deep retracement to the upside, somewhere up to the previous top here. It could be 132, 135 area. We will calculate it with more precision as soon as this action will start. And in the last report, we said that take a look market stands near the confidence resistance, and probably that's probably was an overbought. I would suggest it's also probably the overbought. I just now recalling what we discussed in last week, in the previous update. Well, not quite an overbought, but still, this is the confidence resistance. That's oversold. So, and we said, following the normal price behavior of these patterns usually happens. The market, once this large pattern is formed, market usually shows some pullback inside of the body of the pattern. And since we are at the confidence resistance on the weekly, it's definitely some respect of this area should start. That's the last thing that we discussed in the previous update. And indeed, then we are watching for this point, how this reversal will start. So in our updates, and currently you can see that reversal has started. Now we could estimate the possible destination point where the market could reach, where upward reversal could begin. So it means that currently we have two different steps in the short term. That could be probably some scalp short positions, but our major scenario is to get a good point for taking the long position with a possible continuation based on this engulfing pattern. Great British Pound has significantly less relation to the United States dollar index because it takes just 12% compared to euro. Euro is almost 60% in dollar index, while Great British Pound is just at 12%, and it has no so tight relation to the dollar index and could feel a bit more free with the motion. So that's it means that maybe on the euro currency we're expecting different action, but on the cable it could be different. So on the daily chart, we could consider two levels. First is 121.75 as first 30% support. 618 1880, it's 119 area. It's also accompanied by the daily reversal. That's two levels where market supposedly could stop the retracement and reestablish upward direction based on this A, B, some C point somewhere, D pattern. So that's our primary scenario that we're watching for here. Here, guys, probably you could recognize by yourself what the pattern could be formed here. On the followed FM chart, you could see that could be head and shoulders. Since we're at weekly confidence resistance, market here is also finally has completed our XOP. Recall when the reversal has started here, we said, well, we haven't completed XOP, and it's probably market should hit it first before downward reversal. And indeed, this market has completed the XOP, and then downward action has started. Also, we have the accompanied bearish divergence with the MACD indicator right at the weekly confidence resistance. So all preliminary steps to trigger the possible retracement is done. Now market showing downward action here. If it indeed will be some kind of a hand shoulders pattern, so it has the two targets. First is the some A, B, C top patterns, OP, somewhere around 119.50, right here, or ultimate target, which is equals to the XOP, but it's also classical approach to estimation the target, the distance between the neckline and the top counted in the point of the breakout to the downside. It stands around 117.30 area. So everything generally develops 118.88 fib support, and probably we could keep an eye on this level and also the first 30% support for a position taken. So we could split the position for scalp in, scale in on some levels, because we could just miss for sharp recognition of the precise the level where market could turn in opposite direction. So that's why we should keep an eye on the both levels. Head shoulders also could fail. That's also possible. That's why I think that we should not ignore the first level as well, because here at least the 30% of the position you could take, because when the market will start forming the right arm, you could move stop to break even. If head shoulders will fail, market will skyrocket, you will have the position. If not, and it starts dropping, well, you will close on the break even stop and just will take the position later and better price. So that's the approach that we usually recommend to do when you would like to take the trade, but you do not know definitely at which point it's better to do. So that's currently what we have from the cable. Let's see how situation will develop, because potentially that's really great opportunity. Well, engulfing is really huge on the weekly chart, and its potential also very significant. That's why we should not ignore any of the support levels where we could try and take the position, because on the intraday charts, overall price action is not really very fast. As you can see, it's gradual, choppy, and it could change in any time. So it could happen that if you were waiting for just 118.80 level, you just can't get them, and market could turn up earlier. And from that standpoint, it's better to apply the scale in.